Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, and I have Jesse Clem on the line, and he is a founder and CEO of Loquidity. Jesse, how you doing this morning?
Doing great, Joel. Thanks for having me.
So tell us about Loquidity. I like the name.
Thank you. Liquidity actually stands for local liquidity. We were trying to think of a way to take local capital and that is liquid and put it in the local markets, and that's where we came up with that name. But Liquidity is really, it's just an online real estate crowdfunding platform focused on bringing quality investment opportunities in the Midwest. And we're based in Grand Rapids, Michigan, and we're focused on connecting real estate sponsors with accredited and unaccredited investors who are passionate about, supporting revitalization of the Midwestern property markets.
Okay, you have a background with some Fortune 500 companies. What ones did you work for, and what did you do for them?
So I've worked, and the team has worked with a bunch of technology-related entities, IBM and Comcast and Accenture and others, and done a lot of sales and services implementation leadership roles in and around those companies, as well as I've started and run some technology firms myself when I was, I guess, younger even than I am now. But those give us great experiences with technology that are allowing us to bring a great user experience to our investors on our online platform.
Okay, so you went from that to becoming interested in multifamily and commercial real estate investment. Just talk about that transition and kind of what the catalyst was.
Yeah, it's really an interest I've been had for a long time. It started when my dad and I were building and fixing houses when I was younger. I'd help him in the summertime, and that's where the interest really started. But I really began personally investing in real estate about 8 years ago after an exit of a company I had started. I had a renewed interest then. And I wanted to begin to realize the benefits that direct ownership of real estate investing offers. And so I just started with a small, simple duplex after doing a lot of homework and learned a lot from the School of Hard Knocks as you go and built it up to apartment complexes. And now what we've done, along with my business partner, Joe, we want to take experiences like those and bring that experience and open up those opportunities to other investors to capitalize by using our platform to raise money for their same types of passions.
Okay, and also you dabbling in the commercial real estate. Are you doing this locally in Michigan, or is this something you're doing across the country?
Yeah, great question. It is commercial real estate based, so it can be a multifamily apartment, it can be mixed use retail and residential, it could be industrial, it could be whatever commercial asset classification that any developer or sponsor wants to bring to the platform to look to raise funds, debt or equity. So it's that asset classification, and then we're doing it based in the Midwest. So we're really focusing on the Midwest market. We think it's an underserved market for crowdfunding, and real estate offers great opportunity in these markets. So Detroit, Chicago, and Cincinnati, Columbus, et cetera, and then the secondary markets. And so we're focusing in that pocket of the country. We really think it's overlooked by investors on the coasts.
So are you more focused on purchasing existing properties and trying to upgrade them, or are you looking for dirt and willing to get the money together to build and develop your own property?
It's really, Joel, it's all the above. It could be a developer out there who has a patch of dirt and needs some capital to put in his horizontals, get the land ready and then build on top of that. It could be an owner operator today who wants to expand their portfolio of buildings they already own, and so they just want to acquire. It could be somebody who wants to do value add. They acquire a building at an attractive price, but they have a vision for a newer and higher best use, and so we could raise funds to help them take that building to a new use, or maybe it's just an investment in a local community that has a building that had former glory days to be brought back to its glory in a new way. So it's any of the above.
Okay, so let's just walk us through your platform, your site, who you need to be on there, how you check out the entities that are going to be doing some investing, the due diligence that you have to do. Just walk us through your site, and if someone was interested in perhaps investing in some real estate with you.
Yeah. So for an investor who's looking to diversify their asset portfolio and wants to look at maybe some direct ownership of either notes or actual the physical asset, the property themselves, they can definitely go to our site at loquidity.com and they can look and see what investments are out there. We just recently closed a transaction. We have some more coming, so they might not see any current ones, but we have a pipeline full of properties and notes that we're doing due diligence on. So they would see opportunities in there, and they could view the full description of every property or investment. They would see the full expenses, disclosures, everything. One of the key things about crowdfunding in general is that we're bringing total transparency to a marketplace that hasn't seen it in the past. So typically, direct ownership and investments are behind the scenes and quiet and not very public, and we're looking to bring transparency to that. So all the returns, all of the expenses, the plans, everything are all on the website for them to see. And they can make a decision and choose to invest in that one or a different one, or ask us questions right from the site.
Okay, discuss the new crowdfunding laws in Michigan.
Sure, great. So the crowdfunding laws in Michigan are a little unique. What it allows us to do now is raise capital from unaccredited investors within a project within the state of Michigan. So for the excuse me, I'm sorry, I had to get a drink of water.
That's okay.
For Michigan in general and about a dozen other states, you can now crowdfund from people that are not accredited investors, and Michigan's unique in this aspect as it's leading the country in going after these unaccredited investors. And so we can go after a marketplace and give opportunity that investors haven't been able to take advantage of in the past. And that's really exciting news for people that want to own real estate-based assets.
Why don't you just discuss an accredited investor versus a non-accredited investor?
Oh, for sure, Joel. So accredited investors is a definition that the SEC has, and an accredited investor makes more than $200,000 a year for the last 2 years, and with a reasonable expectation that they're going to make that again this year. Or they have a net worth of $1 million in investable assets, not including their home. That's an accredited investor. And typically they have been only allowed to invest in private placements or private offerings such as real estate like this. But Michigan is now allowing, and other states are now allowing, in some instances, the unaccredited investor market to take part in an apartment complex or a retail building that they want to own themselves now.
Okay, so discuss your latest deal and how Michigan's new laws played a role in that, and the new Jobs Act provisions, how they played a role in your latest deal.
Yeah, so the Jobs Act was really key to this industry. The Jobs Act rules allow sponsors, syndicators to advertise their offerings, something that has been banned for nearly 80 years. So great marketing opportunities for sponsors and for platforms like ours, and these are called 506C offerings. Our first deal was to acquire a multifamily project outside of Grand Rapids, and it received a lot of interest from potential investors because we were able to advertise this out. And there's a lot of interest in investors owning real estate, and they're always excited about that asset class. And so with the ability to market that, it gave us a great interest from potential investors in that deal. So since the Jobs Act rules are relatively new, though, some investors and syndicators are still taking a wait-and-see approach on this crowdfunding idea and concept. However, with real estate, it's the fastest growing segment within investment crowdfunding, and we're really excited about the potential, and we see a lot of interest out there.
Okay, I gotta ask you about REITs. I mean,
Yeah.
you make your money on your deals, and I'm not sure where you put them in the market, whatnot. What do you? I mean, they pay their solid dividends. Is there any REITs that you follow, or your opinion on them as investment vehicles?
Well, I think the REITs are great and they serve a particular purpose. But I think investing in crowdfunded real estate offering is very different than investing in REITs. And I personally don't follow too closely the REIT market anymore. I used to from prior days, but not currently. But crowdfunded real estate offerings allow multiple advantages that investors can have versus a REIT, like on a platform for Loquidity. Direct ownership directly of the real asset, so you can get actual ownership interest in the asset. You'll get all the benefits of that, so you can get tax benefits. You can get interest deductions on all kinds of expenses that come directly to you versus to the REIT itself. So there's total transparency on the crowdfunded opportunity versus a REIT isn't always total transparency. And then lower investment minimums for sure on crowdfunded opportunities to own some big buildings with lower investment minimums to get in. And you can build your own portfolio of custom properties or property types that you like based upon your interests, whereas you don't have any control of that necessarily in a REIT. So a lot of the same benefits of a REIT from an ownership perspective of real estate, but in a different way with what I believe are better benefits of direct tangible ownership.
Okay, and finally, we got some data out from some of the housing stocks here, and I know you're more into the the multifamily and the commercial real estate, but could you just give us your just broad opinion here of on the housing stocks, on the housing market? We had a guest on a few weeks ago that was just really bullish that sector. Felt that the over the last 5 6 years that the we've been underserved as far as producing new homes. Do you have any outlook on the housing sector?
Yeah, I do. Joe, I think I'm right in line with that commentary. I think the housing sector has been depressed for too long, and the same thing with the multifamily market and the commercial segments. And it's been niche by niche basis there. I think it's been a tremendous buying opportunity, and we're really seeing things heat up right now and getting really competitive as people are seeing that real asset investing within real estate and housing or commercial real estate in general is a really strong place to be. With jobs coming back and economies moving back, people need to move and move with locations of jobs, and with jobs comes real estate needs, and real estate needs grow. And so we're seeing the lowest occupancy, the highest occupancy rates we've seen in years all over the Midwest, and that's a strong indicator of housing demand. And we're seeing housing starts increase, and we're seeing apartment starts increase as well in most of the secondary and major markets. So there's a huge increased need for that right now, and I think in the next 5 to 6 years are going to be really, really strong.
Okay, Jesse Clem, founder and CEO of Loquidity. Check out his site if you're interested in crowdfunding, real estate investing. Jesse, thanks for coming on. You provided us with some great information.
Thanks, Joe. I appreciate your time.